Kashish, hi, good to have you with us. How have you been?
Thank you, Ashu. I mean, it has been a pleasure to interact with you, and I think looking forward to it. I am fine. The team is great. We all are doing fine. Hope all our listeners and you, everyone is safe and sound in the pandemic.
Yes, Kashish. Yes. Everybody, touchwood, has been safe and sound, and this is an exciting session, Kashish. Right? I mean, I've been. I often say this, right? That uh, this is an interesting session, right? And I'm actually looking forward to this session, largely because of the way you're kind of cracking litigation funding, right? Something which not necessarily existed in India. You're actually at LegalPay the champions, right? Who are pioneering and championing this entire innovative product, right? That never existed, right? And solving for many people who've continued to uh, necessarily be dependent either on friends and family to kind of support them through the course of their legal journey, or dependent on financial institutions which never had a product, right? So they essentially had to, for the lack of resources, they had to depend on, say, a personal loan or some sort of other loan, right? And then manage their, the process of fighting a case out, right? But you guys have kind of democratized it, right? You, in a way, you're creating a platform where many people can come in and support that cause, right? And you kind of structuring a very different kind of product. This becomes very, very exciting, right? Because India as a market which has continued to have massive legal issues, right? People have continued to be under tremendous amount of pressure to bring in those resources to fight out those cases, right? But I think with this now possibly available, right, with you trying to sort of bring in a sanity and a certain asset assessment, this should become so much more easier, right? Where people can now come in and participate, right? So this becomes a very interesting conversation at the back of all of what I've said. And yeah, like I said, right, looking forward to this conversation in many ways.
Likewise, Ashu, and I think you have indeed brought a very pertinent point to the entire cusp of this argument, which definitely is an area where it's in our own small measure to support or contribute towards the society as a greater, larger cause. But
Right.
on the flip side, it's a very beautiful asset class, very renowned asset class. In fact, globally, we are democratizing this asset class.
Right.
By democratization, it's not just for the upper retail investors. We work with family offices, HNIs, ultra HNIs, but the idea is to take or have something for everyone within legal financing domain is what we are going after. Looking
Super.
forward to the conversation.
Super. Kashish, before we start that, right, I'd love you to take us through, a quick round of introduction will be helpful, right? Kundan is not here with us in the conversation, right? But he's the co-founder CEO of this company. You're the co-founder CIO of the company. I'd love you to take us through both of your backgrounds, right, as a starting point, and from there we dive into, like I said, right, a very, very interesting discussion that I think we've been wanting to do for a long time.
Look,
Finally, it's coming to fore. So a quick round of introduction will be very helpful.
thank you so much, Ashu. So, just to give you a background, Kundan was founder of Advocate, which was a legal tech. They provide different kinds of services, practice
Mhm.
management suites for lawyers, working with 10,000 plus lawyers. Have been in the
Right.
industry for the last 5 years. Litigation funding, which was a pivot at the time of litigation funding startup Advocate, is now full-fledged litigation funding pivot
Right.
did out of Advocate and a full-fledged startup VC backed with LegalPay. And with LegalPay, the idea is not just to restrict with litigation funding. We are bringing with different insolvency products. We'll get to
Right.
that during our
Right.
conversation. But yeah, Kundan have a substantial number of experience, both industry as well as coming to the idea of
Right.
litigation funding and legal financing and different legal tech and legal SaaS products. I come from strategic investing background. All my life have worked with a couple of years with Goldman Sachs, had my own startup for a couple of years.
Right.
I was part of PwC deal advisory for a few years and had my own startup as well. So here I lead
Right.
the investing and strategy at LegalPay.
Kashish, thanks for taking us through your backgrounds, right? I think given the experience that the both of you have, I think that possibly becomes the foundation of you solving a very, very critical problem, right?
Yep.
Kashish, I would, before we dive into some specific products in terms of how you're structuring them, what are the tech layers that, for example, that you're building, right? Because like I said, right, there's nothing that exists. What I would love to understand is what's the construct of legal pay, right? Now, when I say construct, what I essentially mean is what are the kind of products that you're doing, right? Now, you are essentially a fintech player who's solving for legal, right? Just to bring it in perspective for many people who are going to listen to this, right? I would love to hear from you. How are you? What kind of a role are you playing, right? So that people can understand at ease. You sit in the middle. You rate and assess the quality of the asset, and you basically open it up for people to invest, right? In a way, you've created an alternative asset class for people to look at, right? So people who have been investing outside of, say, equity, debt, institutional, right, and they look at alternative assets, which are alternatives essentially mean a smaller part, which are going to assets that are going to constitute a smaller part of your portfolio. Is essentially you've done that, right? Tell us a little more about the construct, right, and how are you positioning yourself as a player in the process?
Very fair, Ashu, and I think you have actually summarized in a very plain sense what we are doing, and I think that's what the vision or the idea is, to help or structure the entire legal financing market,
Right,
be litigation funding, where plaintiff don't have money to actually solve a larger issue or the
sure,
dispute that they have, or even if they have money, it's a very beautiful financial engineering tool for the businesses.
right,
Think in the sense of a legal insurance where you don't, even if you take a health insurance, you have money, but for an exigency you try and transfer the risk. Similarly, with litigation funding, businesses can transfer the risk
right,
to a third party funder, get relieved of the money, the tension, or the monitoring. We handle everything.
hmm,
We work with different B2B companies, NBFCs on the litigation funding piece. Within insolvency, interim financing is one of our key product areas. Interim financing, in a very plain sense, you're funding the entire insolvency process,
right.
and it by law have a superior secured charge. So even if you
Interesting.
realize 1 rupee out of the entire insolvency resolution or liquidation, you get the first money that
Right.
is. It's a very stable asset class.
Interesting.
For the investors, currently these two asset classes are available within legal financing through LegalPay. Definitely
Hmm.
going forward, there will be much more asset classes, but both asset classes are very different and stable.
Right.
Alternatives is anything which is not equity and bond,
Right.
can be commodities like gold, can be private equity hedge funds, what
Right.
they become LPs, and are generally
Sure.
available for the HNIs and ultra HNIs.
Right.
Idea is to democratize this for the larger audience in India,
Mhm.
uh,
Interesting.
and at a very lower ticket size. So, for example, anybody, and traditionally Indian investors have been concentrating either on gold or
Right.
real estate, but they have been very positive moves during the last couple of years, and I think that pushes it even further to a
Right.
height where investors are so mature, they want to understand and diversify their portfolio. And as you rightly said, 5 to 10% of your portfolio should be good enough for an alternatives,
Right.
uh, where you enjoy illiquidity premium, you create wealth, and you diversify. Diversification is very
Interesting.
important.
Right.
And both the asset classes that we provide are very stable,
Right.
backed by securities. These are not, I mean, in very strict sense, these are not
Right.
bubbles. These are not an area where you would see 10x growth in a week. These are stable asset classes,
Right.
cash based. So
Interesting.
that's
Super. Kashish, we'll try and break down each product, right? I mean, given that this is an area which is completely new, right? Which is something which is unheard of. Indian investors are possibly going to be, some of them experiencing it, right? And we'll talk of what you kind of achieved in the course, right? But we'll sort of kind of understand each product in its independent capacity, right? Coming to the first one, right, which is essentially the litigation funding piece of it, right? Why don't you take us through the construct, right? What is the role that you're playing, right? So there are many cases, for example, that are there, right, in the courts, right? Now, the litigants don't necessarily have the capital, and that's essentially where you come in and fill that role, right?
Mm,
Tell me what's so once they approach you, right, from a funding standpoint, right, to come in and support them in the cause. What's the product play there, right? What's your role in the entire process? How do you rate them, the assets? How do you assess the quality, right? Because, like I said, right, I mean, Indian legal system is not an easy legal system, right? We are not. Even the government, for example, is wanting to sort of change this, right? I mean, there's a serious cognizance that they've taken, right? That
yep.
we have many layers, right? Our courts are, for example, they take forever for a case at a district court level for it to come to even a high court, for example. It takes forever, right? There are many nuances that are there. It's not an easy system. It's a fairly complex system, right? But tell us a little more about, the first product that you're solving. You alluded to insurance as well, right? So I'd love to understand what's the construct of the product there.
Very fair, Ashu. And I think the biggest uh, uh, and the best startups, what I personally believe can be made out, which are not easy or a plain vanilla thing.
Right.
For us, for us, the idea is very, very plain and simple. I
Right.
perfectly understand your point of view. It can take ages for cases, and that's
Right.
where our filtering criteria comes into play.
Right.
We don't do property disputes. We don't do criminal disputes. We do plain vanilla B2B commercial cases.
Interesting.
Both the businesses are fighting over through a well-structured dispute.
Right.
And that's what the idea of litigation funding is. Definitely, we'll be venturing into different kinds of products going forward, trying different categories of product. We are doing a couple of them today itself. But it essentially boils down to the fact where you can realize the money quickly, where you can vet everything through your detailed diligence processes, and where you can see a prospective commercial value realized by way of winning something.
Right.
So these are the 3-4 tenets to us when we do anything. Again, the idea is a measure of risk transfer or a legal insurance, as I was telling you. By taking a litigation funding, plaintiff not only takes the risk of whether realizing the money or not, because we work on a non-recourse basis. We essentially implying we only take a cut or receive any money only when you win a case or realize the money out of it.
Right.
So the idea is very simple, but on the similar front, having diligences, we have our own proprietary algorithm which rates every case on these scoring criteria, which in our sense, a 70+ point scoring algorithm, where we rate every case to its merit, even before our strong legal and diligence team details on to the legal merits and operational merits, and our financial and diligence team rates the opposing party on the financial diligences. So it's a
Interesting.
strict, thorough process before any case is funded.
Interesting. It'll be interesting to understand. I mean, why don't you give us a use case, right? I think it'll be interesting to understand from a use case standpoint, right? I was recently in a conversation where we talked to a very large, tech service provider, right? And something that we got to through the course of the conversation is that at any given point of time, between 8 and 17%, between 15 and 17% of their clients, there's some sort of a dispute which is there, right? Now, not in all cases does that dispute leads into a litigation, right? They kind of try and salvage it, right? Because it's a much larger entity. There are many layers, all of that, right? But what will be interesting to understand is that now in an environment like a services business, it's very difficult, right? Because you define something, there's subjectivity involved, right? Now, even court, for example, takes a lot of time to assess those subjectivities, right? And the responses, right? Now, what you're kind of referring to requires a very clear deliverable, right? For it to be rated right. Tell us a little more, right? What are the kind of cases that you look at? Right? What are the kind of disputes, for example, that you would look at, right? Are these very tangible, functional outputs that you would look at, or is there still, or you'd still factor in whatever, say, small percentage of subjectivity which is there, you'd still factor that in, right? Tell me a little more about that.
Very fair, Ashu. And I think what you are referring to is generally used in the legal domain as deficiency of service, where the other party claims that I'm not paying because there was a deficiency in service.
Sure.
And we, unless and until we have a strong point to justify that service or counter that area, we don't fund such kind of disputes where you have any second thoughts about it.
Right.
For us, it's not just about a clear liability of payment, but also recoverability from the opposing side.
Right.
And to counter that, we should have everything documented properly in a very strong legal sense, so that there's no shred of doubt from our side whenever we are funding a case.
Interesting.
It involves a very strong legwork, very strong algorithms which tell us which cases to actually focus on so as to reduce the efficiency. But at the cusp of it, everything details down to how strict our border rules or diligences processes are before we fund such cases. So it's not an easy game to be in, and definitely that's something we prefer to be in, because at the end we want our investors to get the best kind of cases that they fund upon.
Interesting. I would have, you've very diplomatically handled this question, right? Not giving us too much. But Kashish, what's the construct, right? So, for example, when a case comes to you, right? Now, and say, assuming your team is say evaluated it, there is a certain mechanism that you have. You've done that diligence, right? You possibly run through a possibility of say a winnability score, right? If I can put it that way. What
Yep.
happens next, right? What happens next? Now, is the money coming from your coffers? Is the money coming from partners? How is the money for that coming in, right? Because financial institutions have continued to stay away from this particular area for the longest time, right? Not that they didn't know of this. They've I think it litigations typically lead into uh, very erratic possibility of payouts, right? The cases getting, like I said earlier, being in the courts for the longest time, right? What happens once you vetted a case, right? What happens beyond that?
Done. After vetting a case, definitely it has its structure in a fashion to. So, for example, imagine us from the angle we have pool or different basket of funds.
Sure.
Depending upon whose criteria this case fits in, we
Okay.
allocate the case. So,
Mhm.
for example, we have, and like we discussed in the start of our conversation, we have, and we believe in the idea of democratizing it for everyone.
Right.
If it's a case which fits in defined thesis of one specific SPV, we
Mhm.
allocate it to that specific SPV.
Okay.
Say, for example, and that's where the idea of democratization also happens, where a retail investor or an upper retail investor can invest as low as 25,000, 20,000
Mhm.
upwards in any basket of cases. So the
Okay.
basket will eventually have number of such cases which fits
Right.
into criteria.
Okay.
Basically, digitizing a VC model,
Right.
very plain sense.
Interesting.
On the other hand, if these are larger ticket cases, we fund it through our HNIs, ultra HNIs, and international funders who we work with. So
Okay.
we have in for everything. If you are a larger international funder willing to explore India, we are in there for you for
Right.
larger ticket cases. If you're an ultra HNI private equity player who wish to democratize this or at least allocate some portion of their portfolio into such
Right.
asset classes, we are in there for you.
Uh-huh.
If there are small retail investors who have, say, 10 lakh, 15 lakh, 20 lakh a portfolio, you wish to democratize a 5-10% of your portfolio into
Right.
this asset class, we are in there for you.
Very interesting.
Depending upon which kind or category of cases fits into any of these categories, depending upon the ticket sizes, expected IRRs, indeed realization period, because we understand that the private equity
Right.
and HNI could wait for a 3-year, 4-year, 5-year period, but
Right.
but an upper retail category investors would want some kind of returns after
Right.
any 2-year, 3-year on an ongoing basis, and that's
Right.
where the basket of cases comes in there for you. And the idea again is to have something for everyone on the investing side.
Very interesting. But Kashish, how do you calibrate that, right? Because cases can go on forever, right? How do you bring in that, say, for example, dimension to say to the bucket, right? It's very important to understand because like I said, like we discussed, right? Each case is unique. The charter of each case is very unique, right? The litigant is different, right? The priorities are very different. There are so many other complexities, right? You really can't. It's very difficult to kind of bucket it in, say, 10, 20 similar looking cases in one, right? Because the other nuances are just so much more dynamic, right?
Very
You can do some bit of it, but how do you standardize it as a product, right? Is what I understand. And so from an investor standpoint, right? How do you do you commit to a payout? Do you commit to, or is this like an expected IRR? This is possibly the term of till when you'll have to stay invested, right? What's the communication on that front that happens?
Yes. So, for example, if you specifically talk about an upper retail category investor,
Right.
you would have a defined thesis for every SPV. So, for
Hmm.
example, if it's a 3+2 year SPV,
Right.
for a 3 period, you would be invested in similar kinds of cases,
Right.
which will be committed. Once you are committed, you would have a very detailed view of the portfolio, which kinds of cases are committed, what's the
Right.
stage of such cases, what's the expected time to realize, what's the expected IRR, your MOIC. All these are, and we believe in complete transparency to all our investors, because
Right.
at the end of the day, if there has to be an asset class which has to be a long-term investing, you have to be completely transparent with all your
Right.
investors.
Right.
So an investor, and I appreciate your fact, but I will go down back to our start of our conversation where I said we don't fund property disputes, we don't
Right.
do criminal disputes. All these are cases which are dragged in the courts. For us,
Right.
the idea is commercial cases.
Uh-huh.
And in commercial cases also, we go specific by even the high court level or the case level. Say, for example, if there are specific high courts which are known to drag cases, we don't fund such high courts. If there is a specific judge or a bench which is known to drag such cases, we have our proprietary database and algorithms to rate even such instances. Even the
Right.
performance of the lawyers are rated. So all
Uh-huh.
the nuances are brought down before such cases are funding. And to answer your question, if there, so for example, if it's an arbitration case, you have a defined
Right.
time of 12 months, extendable by
Sure.
6 months.
Right.
If there is a B2B commercial disputes, generally are settled within a 2.5 year old period.
Right.
We encourage settlements as soon as, so even if you expected a 2 year period for a case, it can be settled even in just 2 months,
Interesting.
definitely giving you even higher IRRs. So
Right.
all factors or nuances play into field, and definitely you enter at different stages of cases. You enter at late stage, you enter at mid stage, and when these basket of cases are given to an investor, you get distributions as soon as your cases are realized. So
Okay.
for example, if you invested onto a collective basket of 8 cases, a couple of them would settle in a year, a rest, a three, four of
Interesting.
them would settle in 2 year period,
Right.
3 year. So you have a staggered way of receipt of money. You have a staggered way of realizations, which is bundled to an IRS. So it's a very stable asset class backed by assets. It's
Mm-hmm.
not. It's not based on such illusion. To be, everything is
Right.
backed by very strong cases. At the end of it, we believe in complete transparency. None of a
Right.
single rupee is paid out directly to us. We only
Right.
charge our own management fee, which is given in the
Interesting.
contracts communicated to the investors. The entire money flowed directly to the lawyer. The distributions happen to the structured SPV, and this paid out to the investors as soon as realizations
Sure.
has been.
So, Kashish, I think those are points that I completely understand, right? I mean, I think these are mechanics that are already established, right? I think my only sort of a question essentially is around the construct of the product, right? And I completely understand, right? I mean, given that this is a new asset class, given that we're going through so much change and shift when it comes to judiciary, right? Uh, I mean, what you're doing is essentially kind of evangelizing this entire space, right, for many other people to sort of look at, right? And as more people come into the space, right, I think it's only going to get better. But uh, also the fact that you're very clearly getting into some very defined areas, right? You're not getting into uh, uh, you know amorphous, for example, right? Or there is an element of subjectivity, right?
Yeah.
That's what I want to particularly understand, right? Now, when you're doing, and I think also with your investors, there's possibly a very heavy communication play that you have to sort of build, right? Because there will be aberrations, right? Thus, it becomes important that you are in to continue to sort of keep them updated and stuff like that, right? Actually, what I want to understand is that what are the kind of returns that are happening, right? So, for example, say, assuming you get into a funding of a certain, say, a bucket, right? Now, uh, what's the how does your mechanics, for example, work, right? What's your business model in that, right? How do the investors get a payout? uh, is it a safe assumption to say that you essentially portfolio manage in the process, right? And or do you have a longer term association in that in the larger scheme of things, right? Because you're doing a lot more than just being a marketplace, right? There's a lot of intelligence that you're bringing in. There is a lot of sanity that you're bringing in rating and ranking in a set, right? Tell me a little more about that, please.
So very fair, and to be very honest, the entire, I mean, in a very loosely sense, if you want to compare it with a portfolio management service, at the end or cusp of it, we are a service provider to the investors, to be
Right.
very honest, and we
Uh-huh.
charge our own management fee.
Right.
And definitely the investors are, once you commit to an SPV with a defined investment thesis, similar kinds of cases are bucketed to your SPV, which, so for example, even before releasing any SPV, 70-80% of the cases are pre-identified, committed, and then an SPV is launched.
Right.
So you are sure that at least 70% of the cases are fitting into those SPVs even before the launch of the SPV.
Interesting.
Obviously, there are certain client attorney privileges because of which we limit the passing of information, and that's fairly agreeable or communicated well in advance to our investors. But
Mhm.
at the end of it, it's the only a measure or the entire process of litigation funding involves not only detailed diligences and AIs from our aspect, but also a clear tracking and communication,
Right.
which by way of continued communications
Right.
plus a very detailed portfolio tracking of every underlying case or a basket. So it's
Right.
a very plain, transparent, clear system to the investors.
Sure.
Definitely going forward, an investor might be able to choose different kind of cases he or she wish, or create his own basket of, say for example, Amazon for
Right.
litigation funding. You select 10 kinds of cases. I need these 10 cases. Create a basket for
Interesting.
it.
Interesting.
But at the current angle, the investors, even a couple of them coming from a legal background, don't have such a clear, detailed diligences, so that they can measure or rate such types of cases which fits into their investment horizon.
Sure. I think, Kashish, what will be interesting is if you could take us through, I think one case study, right? So, for example, certain bucket that you created, right? So, assuming that bucket was $500,000, right? In terms of, say, disputes, right? Now, what will be the process beyond? So assuming you've created an SPV, you have now that SPV, the participation is there, right? You've set a price to it. The participation is there from your investors, right? Uh, how does the return structure work out, right? So your participation comes at a price, right?
Yep.
Of course, you have an offtake in terms of your service fee, right? But what is the IRR? How do you calculate the IRR for investor? I'd love
See,
to understand that.
if you compare the global IRRs also,
Sure.
globally, it's a very stable asset classes with the IRRs even better than the most of the private equity or hedge funds you would have
Sure.
even imagined. So
Right.
a median IRRs of some of our key players are even above 100%.
Right.
Uh, and the median, you would say around 45-50 odd percent is bare minimum in the industry.
Right.
For us, definitely the IRRs are a major course where we democratize it for our larger ticket private
Right.
equity players or family offices or ultra HNIs, HNIs. For the retail category, definitely the ticket size is smaller, so the IRR
Right.
take a hit to some extent, but still it's 25% plus IRRs that we target for our investors. We give a range always 20-25 odd percent, but our internal target is to at least deliver them 25% IRRs, so as to give them a comfort of this asset class. Now, these are pre-tax IRRs. You would have uh,
Sure.
a taxation at the SPV level, but
Right.
still, as an asset class, you could choose to diversify an asset class, which will give you higher upside, higher IRRs, and definitely it's an illiquidity premium for a long time.
Interesting. Kashish, what I want to understand is, you've answered it beautifully, right? What I want to understand is a level beyond what we've discussed, right? If say a bucket is $500,000, right? How does the payout structure
As
work
soon
out,
as the
right?
basket of the cases are resolved,
Sure.
uh,
So I'm saying, are you working on a deep discount? Are you just working? So, for example, uh, so this dispute bucket, for example, says is $500,000, right? Your cost of say fighting those cases out is say $100,000, right? That essentially means there's 400,000 which is there in the bucket. Now, all of this money does not comes to the investor, right? This is essentially a large part of this goes to the litigant, right? What percentage of that money? I mean, what is the settlement structure between the wins um, uh, and the payout to investors? I want to understand that structure.
okay, first I will clear it. So, for example, if it's a $500,000 is the ticket size of the bucket,
Sure.
that 350K or half a or 500K, whatever
Right.
maybe the amount that will directly go to the cases to fund such costs. Nothing goes or pays to the litigant in all majority of the senses. It is funded directly to the litigant's lawyer, or court fees or arbitration fees, whatever costs are associated with each different cases
Right.
is funded directly to the payout. On
Right.
successful realization of that money, we take a blended cut, which
Okay.
definitely depend upon what the stage of case is, and everything is communicated upfront
Right.
in our portfolio page to the investors.
Uh-huh.
On realizations, as soon as the basket or a single case from the basket is resolved, we take our charge and pass on the balance amount to the investors. So it's a mechanism where it's a complete flow or a trail where they would have invested into a basket of the cases, realize, and we are a service provider to them. Yeah, very, very fair. And see, if it's a $500,000 bucket, typically an investment that would be made as a terms of contribution from the investors is typically 5 to 10 odd percent of the corpus. So if it's a $500,000 bucket, 50K is something that with the ticket size of the bucket, or if you're going at a later stage case, would increase a corpus in between because there are differently claim buyouts or something. So typically it would be 75 odd K. On realization of this amount, there would be a blended cut to every case, which you can measure at a SPV level also. But once the realizations are made from each of the case, the distributions are paid out to the SPV and then figure out back to each of the investor in the respective sense of contribution. Say, for example, if a $500,000 bucket comprised of 10 different odd cases, 50K each, a typical investment that would be made would be from 5K or a 10K amount onto that at max. From that 5K, say for example, on realization of 50K, you have a 20% cut or a 25% cut or a 30% cut. So you get 15 to 20 odd K from that corpus. You deduct your balance amount, pay out on the basis of blended IRRs, and pass on the balance to the investors.
Interesting. Fantastic. Ashish, you alluded to taxation, right? Now, what is the taxation? I mean, we've been discussing investments, right? Before I discuss, so taxation is something which is very, very important. But before I do that, right, now, does this requires you to, this is a completely new asset class, right? This is possibly beyond the definition of alternatives or alternative investment that has been that's made available, right, by say SEBI and some of the other institutions, right? Do you still fall under the purview of AIF when you, for example, talk about SPVs, right? Now, bringing an SPV together, when you, for example, say venture capital industry, right, something which was new has now kind of been aligned in a certain form and way, right? There are very clear, defined directives that you have to sort of follow. You have to create an SPV, right, under a certain defined, statutory guideline. And then that becomes your operational play, right? In your case, is this the same, or you can actually go on to create, while of course you're larger, from a language standpoint, it qualifies as alternatives, right? From a class standpoint, it qualifies as alternatives, right? Does this still require you to have those AIF, approvals, and you have to create that kind of setup to operate these SPVs, or these are SPVs that are on call basis, which are not necessarily fall under the current definition and guidelines that are there in the Indian legal system?
See, to be very honest, even litigation funding globally also is regulated in a very, very specific countries, to be very honest. Within India, we go by a measure where we would want to be regulated if there are any specific rules. Till the time we are following the best practices which are available globally, we follow all the guidelines of the MCA. We don't fall under any of the categories of the IFs, CAT 1, CAT 2, or CAT 3. In any sense, this is again not an investment per se, it's a case management service. When it's a case management service, it essentially means you're providing a service to a litigant. Which again does not fall in any of the categories. It's a general service that you're providing. We have blended that service into an asset class for the investors is an innovative way from our end. But at the end, if there are any regulations, we're more than happy to abide by them. But even if they occur at any point in time in the future, definitely it will be below what we have been already doing, because we follow the best global practices which are followed globally, which would include numerous other examples of, we can have a separate session on that, but there are very nuances that we follow because we believe in complete transparency and complete ethics from our end.
Super. Kashish, we're going to move to the next product, right? We've spent a lot of time discussing one particular product, right? We're going to move to the next product that you have, right? And that is of IBC interim financing, right? And that's another area, especially in a post-COVID environment, right? That's an area which has emerged in a very, very large way, right? There have been disputes, right? NCLT has been extremely active, for the last couple of years, and I think that's essentially there is a very strong intention to make ease of doing business, for example, right? And I think trying to sort of control or basically cultivate best practices, right? So that businesses are aligned, promoters are aligned, right? There's a payment structure which is going out, right? And then that does not the bad apples don't necessarily that effect does not necessarily carries into the entire ecosystem, right? And I think these are initiatives, right? COVID has been an unreal year. It made many people go to NCLT, right, for a resolution. IBC has become so much more relevant, right, and prevalent. A lot of people appear. Tell me a little more about it, because you built a product which is specifically for that requirement, right? Last mile funding, right? Insolvency cases, right? Tell me a little more about that.
Very fair. And see, IBC or entire insolvency have been a game changer of the last couple of 5 years, if I would say. The
Sure.
entire machinery which was stuck in the system is
Mhm.
something which is churning up. And
Right.
we privileged to be part or contribute under IBC and insolvency in whatever way we can.
Sure.
Interim finance is a very strong product. It
Mhm.
funds the entire insolvency process.
Okay.
On the secured or the investing side, it's a very stable asset class.
Mhm.
And we have instances where HNIs, ultra HNIs have personally called me and said me that if they can park their excess funds for this shorter term of period, it's a beautiful game in for them. And that's
Right.
what they are doing with us.
Sure.
So it's a very short term product, say a
Mhm.
6-month, 12-month, 18-month product.
Right.
Gives you superior IRRs, better than all the say a fixed income product. Definitely, it's a fixed income product. Still give you superior IRRs, stable, backed by the assets, because at the end you have a charge even above a lender, a secured lender,
Right.
which would include a bank. You would have a charge even above them in
Interesting.
terms of insolvency, and you definitely enjoy the entire process where you are contributing to the churning of the machinery, which was stopped with Indian domain for over the last 2 decades. So that's again a very beautiful asset class for us. So if I would say on any,
I'd love to know the mechanics of that, right? So I'd love to know the mechanics. If you could take me through a case study there, I think it'll be interesting. And sorry, my apologies, right? I'm continuing to ask you for more and more case studies, and that's largely because a lot of people who are going to be listening to this, right, might not necessarily come from that background, right? This only helps them understand better. Possibly a lot of investors, right, who are not necessarily looking at this asset class, right, will start to look at this asset class, and it sort of turns into an advantage of sorts, right? So if you could give me a case study on IBC particularly, that'll be very interesting.
Sure, definitely. So for example, you have a company who is asset heavy, backed by hardcore assets, have plant and machinery, equipments, land and building comprising major of the composition, but don't have, and definitely don't have liquidity to service the debt. So in such a scenario, definitely any of the creditor, operational or financial, would approach the NCLT that give me my money, liquidate this company or resolve this company, or whatever means you would want to. In such a scenario, NCLT then either appoints an interim resolution professional, which is an interim CEO of the entire operations. And the only job of this RP resolution professional is to find buyers for this company or to liquidate the assets and pay back whatever money they realize to the creditors, be it financial creditors such as banks or operational creditors, be it any operational creditor. In such a scenario, but to run this entire show where you would need a 330-day or a 180-day period cycle, call bids, do the valuation, call various cost assessments, do the entire structure, you still need money. That's something which was not available in the first place as well. So you need money even to run the resolution professional process. For this, we lend the money as a very secured asset charge or the overall cover of the asset by law. So this is defined under the IBC law that any interim finance that a resolution professional raise or by the approval of COC, which is raised, will have a superior charge. So for example, if you have 100 crores of assets and you lend a 50 lakh or a crore to them, you have still a security of 100x. Any money that is realized from either resolution, so for example, if it's resolved for 80 crores or 70 crores, you will still get your money along with interest till date as your first charge. If it's by God's grace not resolved or goes into liquidation, sale from any first asset, you will receive the amount along with interest till date.
Interesting.
So secured lending product, again a very beautiful product, a fixed income product. But yeah, still gives you IRR. So for example, if I would say you would invest into an FD, still receive 4 or 5% in a year, I would say better than an FD, which is even not secured in the fully secured in the current scheme of things. You could invest into an asset class of interim financing where you could be invested for just a year and a half and still get an IRR of 16, 17 odd %. I think backed by the assets of 100 times of the lending amount. I think
Super.
that's what the idea is.
Super. Kashish, what's the mechanics of this product, right? I mean, how is this structured, right? Are the payouts, kind of defined, predictable? Of course, you've spoken of coverage, right? But how is this structured as a product?
It's a very plain vanilla structured product. If
Mhm.
we have a larger ticket investor, it is directly through NCDs. If we
Sure.
have retail investors, we have an SPV model again.
Mhm.
Again, within the rules of governance, we follow strict, because by our name also we want and we abide by law to the strictest sense, and not just law, by the ethics as well.
Right.
And at the end of it, it's a pure play lending
Right.
with fixed payouts. Obviously, if it goes into liquidation, you'll have higher payouts coming to you, but definitely it's structured as a fixed income lending product. The only realization or the sad part of this fixed income product is you get the money on maturity.
Right.
So there are no fixed timeline or disbursement. It functions more like a bullet upfront investment and bullet realization. There are no
Right.
standard way of payment. But definitely to counter that, again, and short term illiquidity, I would say you again get 17%, 16% IRRs, which is again beautiful in this current
Very
domain of
interesting.
finance.
Very interesting. Kash, we kind of very, we mentioned of taxation, right? We wanted to talk of taxation. So I'm going to use this opportunity across both of these products, right? What is the taxation, right? I mean, you're doing a SPV structure in most cases, right? I would love to understand the taxation at an SPV level. Is this, I mean, are we talking about STCG? Are we talking about LTCG? Or are we talking about a different kind of a taxation system here? Or and in an NCD structure, right? Are we talking about the way we do it in FDs, right? Is the same taxation structure there, or is it a different taxation structure there, right? Tell me a little more about that.
Definitely. See, because of SEBI regulation, if it's an NCD or a private or a public, it is directly governed by the NCD's law,
Sure.
taxable as the NCD's LTCG and STCG.
Right.
When it comes to an SPV structure, it is profits from business.
Okay.
And whatever are profits from the business payouts are
Right.
exempt in the hands of investors. So it's taxable at the SPV level in terms of the SPV structure, but in terms of direct investments or an NCD, it's directly parked or taxable to the investor who would have invested in a normal LTCG, STCG.
Interesting, Kashish. I think no conversation can really be complete, and especially in a and I think what is important is, and I think why we are spending so much time, right, understanding these products and the construct of these products, is that nothing of this sort has existed, right? I think you're possibly the first person, like I said at the outset, right, evangelizing, a very different product category, right, or a very different investment category, if I can put it that way. Uh, it becomes important to understand the challenges, right, that you come across, right? And of course, there are, and I'm sure you understand this, and you'll agree to this, right? There are challenges at a judiciary level, right? We don't have a single legal system, right? We still have divided legal system, right? I mean, India is a difficult market to deal in, right? When it comes to say judiciary and so on and so forth, right? What are some of the challenges that occur in your case, right? Because you have a responsibility on both sides, right? One is, and I think most importantly, on the investor side of it, right? What are some of the challenges that you experience that you think and hope and believe should get improved, right, at a systemic level? What are some of those points? I'd love to understand that.
Very fair. And I think our Indian domain in terms of both system and legal has been developing, and it's a
Sure.
very good sign for, in fact, our business. And because
Right.
we, in all strict sense, abide by all possible rules and regulations, and even
Sure.
go beyond that, I'm restating the same
Right.
point again. We measure, we definitely try and be innovative in our approach, because that's what we are here in
Right.
for. Within that innovation, we try and stick to the best possible practices. Forget about legal, because legal is something that everyone abides to. But
Sure.
if you're able to deliver better than what is expected out of you, these are ethics that form basis of your any of your business constraint.
Right.
When it comes to challenges, I think definitely system will evolve, and whenever it evolves, we will be sure that we will be adhering to the best possible standard, because we already continue to do so.
Interesting.
In terms of the maturity of the investors, I think they have been phenomenal. I congratulate all the investors whom we interact with. Even a
Sure.
small retail investor or an upper retail investors who invest a small ticket size of 20-25,000 also understand the asset class and then invest. I think
Right.
this not only shows the maturity of the Indian investors that have been piling through their enormous availability of knowledge and data, but also the maturity or their willingness to try
Interesting.
different products in a different legal domain. And I think they don't go by here and say the kind of conversations that we have with investors. I think they grill us to the nit of it. And for them, the only idea of investing, and we like such conversations because only then it keeps us rolling and pushing us harder to be
Right.
as innovative as possible.
Agile as possible. Interesting. Kashish, you're moving into a SaaS. I mean, you're introducing a third line of products, right? Which is that of SaaS, right? Of course, you're introducing many other products on the investment side of it. SaaS is more intelligence and data driven, right? Tell me a little more about that, right? What's happening on that front, right? Who is this product for, right? What does this solve in the process? I'd love to understand that.
See, again, it's something our way of pushing ourselves and contributing to the society, whatever less contribution we can do. The
Right.
current insolvency process, IBC, has been a game changer for the entire 2 decades. None of the laws that could do so,
Sure.
but and it's constantly evolving. But again, there is a need for a tech-focused player like
Right.
us to contribute different categories of products,
Sure.
be it from an execution perspective of an RP, because the current job of RP, and salute to all RPs, it's a very painful job.
Right.
And a very thankless job. They
Uh-huh.
are given in the mid of things with nothing to see, no consecutive timeline or proper steps to proceed. We are
Right.
bringing product management or the entire suite of services for them so
Uh-huh.
that they can manage everything efficiently. Similarly, on the banks, financial creditors, even they are not able to manage things.
Right.
So it will communicate with both the stakeholders and definitely give them different kinds of services, organize the entire market, and
Right.
the delays, if any, that are being done on the IBC or resolution, it will streamline those delays. So there is no one in the market who is building products for them,
Uh-huh.
building product for the ones who have been working so hard to make this insolvency a hit for the
Interesting.
entire of, I mean, governance machinery. I think the entire machinery is stuck just because we don't have proper resolution for the stuck assets or the distress assets that we have in the system.
Interesting. Kashish, towards the end of the conversation, we've had a phenomenal conversation. I think this is a conversation which requires, I think a 40-45 minute session will never do the justice, right? Required for this conversation. I think this requires so much more time, right? Because we're talking about a completely new asset class that is sort of coming into being, right? And you guys are kind of talking about it. Before I move to my last or second last question, right? I'd love to understand what have you guys, where are you guys right now? I think what I know is your first SPV has gotten fully subscribed, right? You're in the process of launching a couple of others. Uh, how large is the team? Whereas, how has the team shaped up? I'd love to understand some of those bits and pieces.
Very fair, very fair. See, at the heart of it, we are tech driven. And whenever you are tech driven, you focus on having a lean team,
Right.
uh, make tech as not just an enabler to
Sure.
the internal processes, but also when you communicate with different stakeholders or provide different products. So
Sure.
tech focus is something, and that answers your question of we are again a very lean team, 25 plus
Interesting.
candidates trying to hustle something and make something of an unorganized industry, putting our 102%, 105% daily on a
Interesting.
consecutive basis, going beyond what we are supposed to do, and definitely hustling towards achieving it. In terms of our SPVs, we have already closed SPVs. We have done transactions under interim finance. The idea is again, we are launching 2 more SPVs in the month of December itself,
Right.
and going by similar trend to have at least 2-3 SPVs every month as we progress towards 2022.
Interesting. Kashish, what are the current assets under management that you guys have?
Our current asset management are very, very specific and wouldn't be disclosed at the current moment because much of this are structured by very private contracts for our investors, HNIs, ultra HNIs, international funders, plus SPVs that we have. So it's a mix of everything, and we don't
Right.
disclose such data
Fair
because.
enough. Fair enough. Kashish, what are the next 2 years like, right? I think you're in a very interesting game. What are the next 2 years like?
So next 2 years will be to try and bring this alternative asset class to each and every individual, because in India, there are roughly a single digit investors investing just in stock markets. You have 90-95% of the population don't even invest in even stock markets. US stock market investing is 55-60 odd percent of the individuals. That's a very
Right.
large figure.
Mhm.
Where in India, alternatives, forget about alternatives, we're barely 1%, not even 1% of the population even know about what alternatives are. So our
Right.
idea is to democratize this, to the wider available options. Don't be limited to just real estate or gold as 95-85% of their
Interesting.
portfolio. Try different products, see, create wealth. And that's what our idea of democratization of asset
Super.
classes.
Kashish, you've also raised capital, right? And LegalPay is a fund company, right? And you have some amazing people who are kind of backing who backed your journey, right? Um, how difficult has that been, right? In an environment where a product did not necessarily exist, to come in and creating a product, right? And convincing these investors to come in and invest in you, right? How has that journey been?
See, to be very honest, we are blessed to have amazing investors who not only see they provide smart capital to us.
Right,
In addition to having capital, they provide us not only guidance and the kind of connects within the industry, but also they believe in us. And for
sure,
that reason, I mean, they believe in us, continue to believe in us. There'll be a couple of announcements planned already. You would get to know them very soon,
sure.
but the journey has been amazing, and the confidence and faith not only by the upper retail investors for our products, but also by our equity and investors. I mean, that has been phenomenal. We are blessed to have such participants and stakeholders within our growth journey, and we
Right.
look forward to achieving greater heights because of the support and blessings.
Super. Kashish, my last question, right? I think no journey is easy, right? And especially when you are a first-time entrepreneur, right? Between you, Kundan, and the other team members that you have at the founding level, right? Uh, and there's always a learning, right? It's not been, from advocate. I've had a chance to know Kundan for a much longer time, right? And of course, you've come on board. Uh, what have been some of the learnings, right? That you think you can kind of share with many others who could be watching this, right? What will that be? And this is usually my last question. It's a little cliched, right? But I think it's very important because it just can help one prioritize better, right? And I think in business it's about priorities. It's about being able to prioritize it right. So I'd love to hear from you on that one, right? What has been your learning as an individual, as a team, right? That you would want to pass on.
See, learnings are many, but definitely the biggest one is be true to yourself, be true to your investors, stakeholders, your customers, your clients. I think the kind of knowledge they perceive, you can't even know how much they go into whenever they invest into such instances. So we
Right.
have true to both our businesses, our customers, our clients, and I think adhering to those ethics. I mean, there'll be tough times for you. You would not scale that exponentially, but at
Right.
least you would sleep at night with a
Interesting.
calm and peace mind, and and you, I mean, you feel that you have provided something as a
Right.
service to your clients, as your contribution to the Indian government or the machinery which has been stuck for over 2 decades. So I think for our idea is to be true to our ethics, be true to our clients, sleep calmly at night, and try and hustling and doing what has been undone in the Indian domain.
That's possibly what you would want to pass on to many others, right, who are watching this. Kashish, it was a pleasure to have you with us. Thank you so much for joining in, right? And thank you so much for taking through your, the product construct, and and all the hard work that you're putting in organizing an unorganized industry, right? I mean, this is something that has not existed. I think what you're really doing is impacting the system in a very different way, right? Today, I think even a commoner can actually feel powerful because on a lot of occasions they don't necessarily go to the court, right, or don't take the route of of a legal, or don't take a legal recourse, right, around actions and activities, because the possibly resource constraints, especially more so in a business environment, right? Essentially, what you're kind of focusing on. I think this comes in as a respite, right? This comes in as something which will work as a very positive enabler, and I think more importantly, will also uh, work very strongly to improve the overall, the business behavior, right, in people, because now there's a tool which is available at the disposal of the aggrieved, right, which is just so much more important. Kashish, it was a pleasure to have you with us. Thank you so much for taking the time out, joining us, and taking us through this journey, right? It's been absolutely phenomenal to hear from you and Kundan at a personal level, but to capture it here is special. Thank you so much.
Sure. Thank you so much, Ashu, and wish you and all our listeners and viewers a very happy and safe health and wealth. Hope we come out of this pandemic much more stronger, sharper.
Hope so too. Thank you. Thank you, Kashish.